at some point as a startup, you're probably going to want to start having conversations with external investors. So what I'm hoping to do in this video is really unbox and unpack the world of VC investing and really what they are looking for in a startup when they're looking to invest, and to make sure as a founder or someone operating within an early stage tech company that you have the tools, you have the skills, you have the knowledge in order to set yourself up for the best possibility of success in that endeavor. And so I guess first and foremost, the thing you need to understand about the way that venture capital works, essentially they're buying lottery tickets, and they only need 1, 2, 3 of those lottery tickets to actually pay out and become successful for their whole fund, their whole portfolio, to generate an outsized return for the investors in their VC funds. And so that's important to know, because all startups have an inherent risk of failing. Everyone's aware of that. You as a founder would be aware of that. Them as VCs would be aware of that. And so it really is as simple as, what is the best lottery ticket out there that's offering the biggest jackpot? And that's the whole thesis around how VCs are assessing startups and looking at startups, because when you're early stage, there isn't a lot of quantitative data to go off when they're assessing an investment. A lot of it's actually qualitative, and those are the factors that I'll run through during this video. But those are the areas that you need to be deeply across. I think as a startup, you may start to focus too much on the quantitative side of things, but really when a VC's coming in and when they're meeting founding teams and they're meeting with startups, their focus is largely on the knowns rather than the unknowns. And the knowns in an early stage are largely qualitative in nature. And I would broadly bucket these across 4 core areas, and I'll run into each in more detail. But the 4 key areas that VCs will be looking at when they're assessing an early stage tech company are the strength of the founding team. So you as founders, your experience, your background. They'll be looking at the size of the market and the potential size for the market for your product, and ensuring that that's a significant size. They'll be looking at your unique value proposition. So what is the problem you're solving, and what is the solution that you're offering to solve that? And then lastly, scalability. So how can your product scale over time? Is there a possibility for geographies, breadth in product, expansion into new markets, customers, new products even? What is that longer term vision? And ultimately, even though you're still early stage and you may have a sort of niche, more focused, more targeted MVP, VCs really want to understand the long-term vision. So they respect that, to begin with, that's the approach and strategy that makes sense when you're just starting out. But they really need you to paint the picture as to where this can go long-term. So it may be that you're launching to a specific segment, a specific market, you're solving a sort of more narrow solution, but long-term, where's the breadth in your vision? How can you expand and build on what you're building now, and how does that grow your market opportunity? How does that solve bigger, deeper problems for your potential customers? And so if we run through these areas in a bit more detail, so strong founding team, this is probably the most critical aspect. If you as a founder have deep expertise and ideally operating experience and real life experience in the area that you're trying to solve, then that will go a long way for VCs believing in the ability of you and the company in executing on the vision and realizing, you know, the potential of the solution that you're offering. They want to understand that you'll be resilient in the face of challenges, which there are going to be many in a startup. It's just the nature of it. It's not guaranteed to be successful, and in most cases there will be hurdles, there will be challenges, and in most cases, you know, there will be failure. So VCs are really backing the founding team first and foremost, even more so than the problem and the solution that you're offering. So making sure that you have a strong core team that's part of your startup to begin with, that you have, you know, breadth of expertise across multiple areas, across engineering, across marketing and growth, across product, and ideally relevant experience in the markets or the solutions that you're offering and hoping to build, and the problems that you're hoping to solve. So that first and foremost is absolutely critical, and assuming you do have that background, this is something that you need to emphasize deep knowledge and expertise around when you're interacting with VCs. Second, so size of the market. This really is going to identify to a VC the potential, the long-term potential of where your business could go. So if you're operating in a really niche, very targeted, very small segment of the market with sort of limited broad appeal, that's not going to put yourself or show yourself in the best possible light in a VC's mind. They want to know that long term there's going to be a huge demand, or at least, you know, target market for your solution, so that if and hopefully when your product does take off and is hitting a point of scaling, that there's not going to be a ceiling to the scale that you can achieve, or that ceiling is going to be, you know, very large. And that's sort of an indicator that, firstly, if you are able to get some traction, that the growth and the size that your company can get to, that's sort of emphasizing the, you know, size of the jackpot for the lottery ticket that these VCs are buying by investing in your business. So that's the sort of next big one. So I'd really, if you're talking to VCs, I'd really take a long, hard look at the actual size of your market opportunity. And it's, as I mentioned earlier, you know, you may be launching an MVP in a more targeted niche area, but really have a think about expansion opportunities and the longer term vision, and do some research around the size of the market and the market opportunity that can exist long term, and make sure that you have sort of clear numbers, a clear understanding of that, so that you can really pitch the size of that market opportunity to VCs during your discussions. Thirdly, your unique value proposition. So VCs want to understand that the problem that you are solving is a real problem that exists, and there's a significant pain point for users today. And they also want to understand why your solution is the best solution. Like, what is it going to save a user? What pain is it going to remove from a user's life? Is it actually a real pain point, or is it a nice to have solution for a user? And you want to be more towards that. It's a real pain point, and solving it, you convert into real time, and dollars and effort saved for either a company or a user that's using your solution, and that solution, either it doesn't exist in the market or your solution why is that the best solution or one of the best solutions that is going to be out there compared to what's out there today that might be solving that problem. So the competitive landscape, you want to be positioning yourself as really being in this outlier area of there's this deep problem that users are crying out to be solved, and your solution either is the only or one of the best solutions that is going to solve that long term, and that will show the company in the best possible light with VCs. And lastly but not least, there are many other factors that go into this, and I'm really just focusing on what I see as the 4 critical areas that probably cover 80% of what you need to be demonstrating. And if you can demonstrate these, then you're going a very long way to setting yourself up for success with VCs during your discussions. Lastly is that scalability. So how will you grow your business over time? Is this a scalable solution that you're able to demonstrate strong unit economics? You can demonstrate strong organic user growth. How does distribution work for you, either initially, if you've got some unfair advantage in how you can distribute and get access to users initially, that's significant. So you may have a network, you may have connections, you may have companies that you were a part of in the past that have expressed the need for this and may become some of your early adopters. But really, your plan to scale and how you can execute on that is going to be, also a huge factor. You may not be ready or at the point where, you're ready to scale, but VCs want to understand when you get to that point, when you're past and beyond the point of early adoption, testing, user feedback, that when this product is market ready, there is a plan and you have a strategy to grow, and you can back that up with either expertise that's on the team. You may have a marketing expert, you may have a growth expert who's deeply across organic growth areas. You may have a understanding of what your sales team and sales strategy might look like if you're selling to companies. And ideally, investors love product-led growth. So if you are able to get users into your product just from the product itself, they're finding your solution, they're self-serving and onboarding themselves into your solution, and then that's unlocking broader distribution either through sharing, through word of mouth, through social. That will show that you've got a very strong and efficient growth strategy for your business long term. And I guess ultimately, if you can have a clear story around these 4 areas that back up the obvious things around, what the product is you're actually building, the usability, the onboarding experience, the actual product itself, which I appreciate is, that's the baby of the founders, and that's something that the founders will be deeply passionate about, is the actual user experience itself. But if you can demonstrate the 4 areas I've just run through around the strength of the founding team, that there's a huge market opportunity, that the value proposition that you have is unique, there's a clear need for the solution that you're offering that solves real pain points for users, and there's scalability in your product and business long term. And if you can combine all those 4 things, with your long-term vision as how you can build and grow the company over time to expand into new markets, new segments, If you can combine all of that and get that message across clearly in a pitch deck to VCs, you will go a long way to setting yourself up for the best opportunity to get the best venture capital backing for your business. And as you're probably already aware, venture capital can open, a lot of doors, from mentoring, from providing access to their portfolio companies that may need the solution that you're offering. They ideally will be investors in subsequent rounds as you continue to grow and scale. So nailing these things is just going to be absolutely critical if you want to secure that first real significant capital raising milestone in your business and set it up for the best possible possibility of success. Hopefully this is helpful and has helped to demystify and really help you get into the mind of a VC and what it is they're actually looking at when they're evaluating startups and evaluating your business specifically.